Hi everyone, nothing major happening today, so let's get straight into the data, as well as today's charts and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with Fear and Greed Index, you can see we were at a 77. It says previous close was a 76, but I believe it was 77. You can see here we've been basically flat for a few days in a row, which is interesting. We haven't seen that for a bit, where it's actually straight flat like that. But that's what we're seeing right now. Momentum back into extreme greed, stock price strength in greed, as well as breadth. These have been the indicators that I've been watching, looking for a little bit of a pullback. Haven't really seen it in terms of price. Put call ratio, extreme greed, volatility. Saw a little bit of a tick up today. We'll look at that on the charts later. And then safe haven demand, the bond markets continue to be in extreme greed. Moving over to seasonality. These last 2 days were supposed to be bearish, and then the Wednesday is supposed to be a pickup. Nobody told markets that, so we saw another up day today. Seems like seasonality is moving into this end of the month rally already. And then looking at February, you can see it's supposed to continue. We see a little bit of a rally early in the month with the Russell and the NASDAQ leading. Supposed to be a strong month for February. I think all of that depends on what we see out of earnings and the FOMC. We covered all of that in the Sunday video, but let's take a look at what's coming up. So looking at earnings, you can see there wasn't really much here for today. Most of the companies beat. Alexandria real estate equities missed by quite a lot, but everything else did okay. And then looking at tomorrow, don't forget it's massive. We have Microsoft, Google, AMD, Pfizer, UPS, Starbucks, Marathon Petroleum, Electronic Arts if you like video games, and then Match Group, always kind of fun to watch that one. It was a big runner during COVID. It's really pulled back since then, but massive day for earnings tomorrow. Don't forget all of that comes out after hours. If you hold overnight, you will experience some volatility. And then looking at Wednesday pre-market, you have MasterCard, Thermo Fisher. And then after hours, you have Qualcomm. Boeing is pre-market on Wednesday. So you got a couple of heavy hitters on Wednesday as well. And then moving over to the economic calendar, there was nothing really for today. And then tomorrow we do have consumer confidence. That's obviously going to be interesting, as well as the JOLTS report. See if that jobs market continues to be strong. Those come out at 10 o'clock tomorrow. And then Wednesday at 8:30, you got the ADP non-farm employment change, as well as oil. That's been fairly interesting recently. Oil's been moving a bit. We'll take a look at that later also. And then Chicago PMI at 9:45. And then at the end of the day, Wednesday, you have the FOMC statement, the interest rate decision. I don't expect that to move. I do expect them to hold at current levels, but the press conference can always be interesting. See if they make any comments on those rate cuts. And if they do, that could be bananas for markets, sending them much, much higher. Taking a quick look here at the Fed futures, you can see it's almost 100% that we're going to see another pause. So not really expecting any volatility there. Obviously, the comments, like I mentioned, could be interesting. But then looking at March, you can see there is some trepidation here. Whether we're going to get that first cut, I think it is unlikely. I think a pause is more likely. It's just about 50-50 between those two at this point. And then looking out to May, this is where it gets a little bit more cautious, right? So the highest percent chance is that we get our first cut in May. And I'm just not really sure that I believe that yet either. I think markets might be a little too optimistic. And if we start to throw some shade on the potential of a cut in May, that could really send some shocks through the market. And then looking at June, it's even more cuts priced in. The highest percent chance is 2 cuts by June, and I still feel like that is aggressive. I was really projecting only 1 cut by June timeframe, so really between May and June, I would expect 1 cut. And you can see the highest percent chance is 2 cuts at that level. So just keep in mind that that's what the market is pricing in as we basically continue to hover at all-time highs. Moving over to Max Pain, you can see we are at just about 1 million options. Put call ratio continues to be quite high at 2.6. That tends to be a bullish indicator to me. Stock price up at $4.90, Max Pain $4.81. $4.90 gives you about $1.50 of upside potential to that top of the puts area, and then that first call wall is $4.95. So don't expect anything below $4.80, and then $4.95 is really that limit to the upside right now based on this chart. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily, you can see Choppy sideways price action, held the 55 EMA, tested that pretty early in the session. That was the 10 o'clock candle, 9 into the 10 o'clock, and then we rallied super aggressively after that. Pushing above this level, you can see once that broke on the 1300 candle, it was straight up another 0.5% on that candle. Pretty large move there, so critical level, important to be watching these previous peaks. Broke out. Remember, these are all-time highs, so I don't have any levels here above this. And then we did not get any follow-through on that momentum that we saw going into the Friday session. We had momentum step down on Friday, and then we did not get any follow-through, so it does happen occasionally, similar to this here, where you're getting consistent steps down, you're expecting some follow-through, you get it, and then immediately reverse. So got that step down, immediately reversed, back towards bullish momentum, super overbought. Let's look at it on the weekly chart, continuing to be super overbought here on RSI as well as momentum. Everything continues to be bullish. Moving over to the NASDAQ, not nearly as bullish here, so very interesting. Sideways price action early in the session. Once 425.30 broke, then we were pretty much off to the races, rallied right up to that next level, 428.50. But you can see here, we're not above these previous highs. We're not above my level either. So peak pricing is closer to 430. We're not near that yet. Got another couple of points before we get to that level. Otherwise, just about the rest of the thesis is still intact relative to the SPY. Bullish momentum, almost overbought here on the hourly chart. Bullish day, super strong, more than 1%, but right at that critical resistance. Momentum did step up after stepping down on the Friday session. So also interesting to see RSI is currently lower than the peak that we saw on Wednesday and Thursday. So you have a little bit of divergence. Price at those same levels, if not higher than that close. In fact, it's higher at the closing price. So you could argue this is a new all-time high close on the daily chart, but we're seeing a little bit weaker RSI. So a little bit of divergence there, which is interesting. So something to watch for. We're at resistance here on the NASDAQ. And don't forget, the other thing here is Microsoft and Google earnings tomorrow. Microsoft, they typically deliver pretty well. Google could go either way. Neither of those would have a major effect if they didn't deliver on the strong expectations for this quarter. Moving over to the Russell and the Dow. Russell broke out, so that's good. Back above 198.75. That is the level that I'm watching. As long as it holds that level, we're in good shape. Let's go ahead and extend out this trend line. So you got some trend resistance up around 201, and then 201.88 is my next horizontal resistance, which is currently my max profit based on my covered call. So that would be a range that I am watching. Otherwise, this looks super bullish. Momentum and RSI both bullish on the 4-hour chart, breaking above these previous highs and my level. And then similarly here on the Dow, continues to break out, make new highs. Structure still very bullish. Momentum and RSI both very strong and bullish. Moving over to Apple and Tesla. Apple continues to fall, which is interesting. Usually you want to see a little bit of market strength being propped up by Apple, but we've seen a couple of days in a row of downside price action. You can see that's 3 days here. We're at the 200. We held that level on the 4-hour chart, got all the way down to my 189.96 level, or 190. Touched that level and bounced a little bit. Let's look at it on the daily chart. You can see that big wick rejection from that level. So we did see a little bit of support come in, but momentum continues to roll over. That's not a great indicator here on Apple. Again, you want to see that market strength from Apple. And then Tesla, on the other hand, did actually show a little bit of strength coming off of that basing structure that we saw on the Friday session. Obviously, be very careful here if you're trying to get long Tesla. This is a very bearish structure. Could be just pulling back to that 21 EMA up at 195.50. If it rejects from that level, then we'll see what happens. But right now, you're seeing a little bit of bullishness. You can see it on the daily chart as well. Massive leg down, inside candle, move higher, got above 188.50. So you could be trading off of that level if you're trying to take some short-term price action in Tesla. Broke it, held it, rallied through. Next level, 197.75. Moving over to Microsoft and Alphabet, the two reporting earnings tomorrow. They had massive days today. So Microsoft 1.43% continues to be on this massive run. Started down around 367 and we're up at 411.50, and we are up even more after hours. We actually closed at 409.72, so continues to look strong, super overbought, very strong momentum. Let's look at it on the hourly chart. You can see that strong move here continuing to drive markets higher every single day. And then looking at Google, also at all-time highs, almost at some trend resistance, which is interesting. Microsoft not hitting trend resistance up until 419, so would expect to move into that zone, especially if they get good earnings, and they do give some strong forward guidance as well, something to watch for. But right now, everything still looks strong. Let's look at the RSI. Yep, still super overbought on both of these, but this has been a massive run. Moving over to Meta and NVIDIA, both of these driving markets higher today as well. You can see NVIDIA was up 2.35%, and it's up even more after hours. You can see $624 at the close and up to $633 after hours. So NVIDIA continues to march higher every day, seemingly. It's been a massive run already from 475 to 633. Momentum continues to roll down, which is interesting, but RSI super overbought. Similarly on Meta, all of these momentum, RSI super strong. But you have to pay attention to price action. Just continues to go higher every day as we lead into the major week of earnings, as well as the Fed. And that's why it gives me a little bit of pause. I'm just nervous about what they're going to say about forward guidance and can they maintain these massive, massive prices. Moving over to staples and discretionaries. Staples did exactly what we thought it was going to. Rallied up right to the trend line, touched it, and paused right there. So the breakout continues. Talked about getting above 72.50 and holding. Rallied right to that next level. Above that, you got $74. This continues to look strong here on staples. And then discretionaries actually did rally here today pretty strongly, probably off the back of that Tesla move. That Tesla move didn't look very big, but it was about 4.5%, which is pretty strong. And then looking at the levels, 174.76 is your next resistance, right at that 144 EMA. Momentum and RSI are bullish, but remember, this is a mixed trend. You can see we are below that 144 EMA. We are above everything else, which is pretty decent, but this overall trend has been down here slightly. If this is another lower high at resistance, that's going to be quite weak, especially with the concerns that we've been seeing on Tesla. This is a little bit concerning, and it does look kind of weak until we get above this level and hold and really break above this previous high as well. Moving over to energy, we're seeing a little bit of weakness come through on these. They still finished either up or flat on the day, so not terrible, but you can see momentum on energy is rolling down a bit. We didn't get to my level 84.56. That's what I'm watching really for that breakout. If it breaks above here, I think we're going to 87.30, which would be a nice little move, or at least up to $86. So some opportunity here if we get the breakout, but right now we're kind of consolidating at resistance, momentum fading, RSI fading. So these kind of look a little bit bearish to me, but it is worth noting that oil and gas looks a little bit better here than energy. Moving over to breadth, we are continuing to see that follow through here on the 20-day average. We talked about that being a potential opportunity here. Got to the level, held there, rallied back through it. So now you got the 55 EMA at 71.60. And then after that, you're looking at these major resistances between 86 and 98. Anytime we get into those regions, eventually we do break down. We've seen it a number of times. You can see it here on the weekly chart. Anytime we get into that range, eventually we do see some kind of breakdown, but we're rallying towards it here, which is probably why we're seeing rallies across the board. We did get a step down towards bullish on the weekly chart. Let's look at it on the daily again. Yep, bullish. Everything looks good here, back into that range. So short-term bullish. We'll see how that plays out after FOMC on Wednesday, as well as the earnings announcements throughout the week. Obviously, that'll have an effect, but right now, short-term bullish. Moving over to bonds, 2-year was basically flat, didn't do much. Right at that 21 EMA, sideways, momentum, still slightly bearish. But I think this is part of the reason we're seeing a little bit of a rally across the mega caps. 10-year was down quite a bit, 1.57%, almost back below that 4% marker. We got down to that support area. We'll see if this holds in this little kind of up channel that we're seeing. If that breaks here, then we're looking for just below 4%, and then you could be looking for 3 3/4 after that. Something to watch for. We're getting rejection from that 55 EMA. We're back below the 200 as well. So a little bit of weakness on the 10-year. I still expect this area to hold and push back towards normalized conditions where we see the 10-year higher than the 2-year. We haven't seen that yet, and it does seem like we're seeing a little bit of weakness right at that key support. Last time we were here, we established that trend from this previous low to that level, ended up holding, rallying higher. We're doing that once again here. We'll see what happens. Moving over to the dollar, we saw another rally up here in the pre-market, moved higher. As soon as markets open, we fell throughout the session, going back to basically where we opened the day. So we were almost flat. You can see it on the daily chart, down 0.01%. Continue to throw wicks to these levels and reject. Still above the 9 EMA, still in this same consolidation we've been in for many, many days at this point, continuing to rally and sell off. See what happens with the dollar after the FOMC. Obviously, that's going to have some major impacts. And we'll probably see some of those impacts coming through on the data as well. Consumer sentiment, as well as JOLTS report. Moving over to bonds, TLT did go higher, as well as J&K. You can see J&K up 0.28%. Talked about this breakout here, held, rallied up again. We're now at the highs going back to 12 January. See how that plays out. If it continues higher up to that 95.61 level, that could be quite bullish for markets. Typically, you want to see J&K going higher with markets, and that's what we're getting now. Momentum, bullish, RSI, bullish. Everything looks good. TLT, you can see we are right at that critical level now. So this kind of looks a little bit more like a double bottom. You can see that first bottom, had that middle peak, gapped here, took a little bit longer on this bottom, and now we're looking to break a little bit higher if we can get above that kind of midpoint. See if this looks a little bit better here on the 4-hour chart. Looking at the 1-hour chart, it doesn't look great, but you can see that initial bottom tried to rally, back consolidated, dipped slightly lower, rejected and end up holding. Now we're right at that critical level. You can see right at those wicks. We're above all the EMAs and SMAs on the hourly chart, which is quite bullish. We're actually almost overbought on the daily chart as well. Let's look at it on the 4-hour. Pretty interesting, right at that 200 SMA, right at that 55 EMA as well. Pretty interesting zone. If it rejects from here, certainly possible. Otherwise, if it breaks, trend is up around 95, 92. And then I have a level here at 96.50. So very critical point going into all of the news and data that we have coming out over the next few days. Moving over to the VIX, you can see we threw another major wick up to that 200 SMA and then rejected all the way down. Ended up still bullish on the day, 2.72%. Momentum, you can barely even see it, but RSI strong, broke above, held the level, looks like it's about to rally through. Didn't quite make a new high, but you can definitely see some volatility coming into markets as we move into all of the earnings and data. Price target for the VIX on this spike up is still up around 1650 in my opinion, just based on this pattern that we've been seeing. Moving over to my accounts, I was neutral on the day, so I managed to make a little bit of money on these covered calls. Like I said, on the IWM, my max profit here is up around 201, and that is 46 days from now, so being patient, we're almost at that max profit already. In terms of extrinsic value, there's still a little bit here, about $200 left, so about $200 to $300 potential on that. And then looking at the Qs positions, still holding these. Max profit on these is out to about $435, so I have about another $7 or so of price action on all 4 of those positions, which would give me about $2,800 more of potential profit on those positions. So no issues, and obviously if they expire in this range, I get my max profit either way and still have plenty of protection if we do see some volatility after all of the news events that I talked about. And then TQQs still holding that position at $54 for the covered call. That is already a little bit above my max profit. Probably should have rolled that out to next week. Looking at the math, that's about $56.80. So just a few cents above it. We'll see if I potentially roll that out tomorrow. Just depends on how strong everything looks. And like I said, I am a little bit concerned about the FOMC on Wednesday. Could absolutely go in either direction. If they come in dovish, that could send markets much, much higher, which is fine. I'll still get my max profit. But if they send markets lower, then I'll at least have a little bit of protection on this position. Overall, still pretty good, up about $3,300 on the month. Pretty good start to the trading season. And I did that with much less volatility and lots of protection opportunity. So overall, good start. Things are going well. Neutral going into all of the earnings and news events. Let me know down in the comment section what you think of the current charts. Can we just continue to rocket higher, or is the FOMC going to pull the rug, or will it be earnings? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.